Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. We are ending our first week of this home broadcast, and thank you so much for joining us. We hope you have enjoyed it so far, and we are, of course, getting the hang of this. Now it's 10:30 a.m. in Manila. We're about an hour into our shortened trading day. Let's kick off with our top story. The Banco Central joins other central banks around the world in going off cycle and cutting policy rates even further. Past noon yesterday, just after market close, BSP Governor Ben Diokno announced on Viber another 50 basis point rate cut that is effective today. So that now brings our benchmark overnight reverse repurchase rate to 2.75%. This is the lowest on record. That is also the lowest since the interest rate corridor was implemented. Now, this is also a less than a month actually after the BSP's last meeting in March 19 when they also slashed the rates by 50 basis points. Now, Central Bank Governor Ben Diokno tweeted that this move was done to encourage lending, especially to those that are most vulnerable amid the pandemic. This is no surprise, though, since the governor had been hinting at deeper cuts all week. And just yesterday, we were reporting that they were weighing growth forecasts from different multilateral lenders. Now, so far this year, the BSP has cut rates by 125 basis points. And considering the 75 basis points cut throughout last year, this move now completes the unwinding of all the rate hikes that we saw way back in 2018. Now, Governor Diokno also added that the falling oil prices, which will slow down inflation, is supportive of his dovish stance. Now, analysts have reacted to this off-cycle rate cut, and the general theme is that they say that this came at just the right time. You've got Mike Ricafort, he's of course the chief economist of RCBC, saying there's no better time to aggressively cut the rates than now, especially as monetary easing measures are really intended to help, amid all of this COVID-19 pandemic fallout. He says there's going to be a huge economic fallout. Another one from BDO, of course, Jonathan Ravela, saying this now softens the blow. And both analysts are actually seeing even further cuts from the central bank. They're calling another 25 basis point cut within a month, especially as inflation remains manageable. Now, another one that actually was a bit surprised, this is from Angela Hesye. She's from Barclays in Singapore, saying in one go it was larger than they had actually thought. But given that the outbreak is still developing and the hit to the economy, to the Philippine economy, is likely to be severe, they do think that the BSP still has room to go some more. Justin Jimenez of Bloomberg Intelligence is also saying that this underscores the serious and urgent pressures on the growth, and they are watching for further signals from the central bank. Apart from just the benchmark rate being cut, we've also seen a lot of liquidity coming in with the triple R or reserve requirement ratios being cut. Nikki Mapa from ING and also ANZ are now calling for additional 200 basis points in the triple R cut. And ANZ said, this might actually happen, especially if the extension of the lockdown in Luzon or the ECQ could be extended even further into May. And that might warrant additional fiscal and monetary aid. And similarly, Union Bank's chief economist Carlo Asuncion saying the government, or at least the BSP, still has space to cut. Now, recall that Governor Ben Diokno had said that the move was appropriate and also warranted, especially now ahead of the May 21 meeting. They say that this meeting in the future will now be canceled and has already been replaced. They've already made the decision. Now, one thing to very much check out for here is how the peso had reacted to this. That actually weakened a touch after this was announced yesterday, but you can see it now strengthening back a touch to 50.775 to the greenback. One trader had mentioned that every time you cut interest rates, the tendency is our currency does get weak. You've got another analyst here, Eugenia Victorino. She's the head of Asia strategy at SEB. That's in Singapore. She said that the Philippine peso versus the dollar could weaken to as low as 51.85 by the end of June. She says she's expecting a slew of bad economic data, which will weigh rather on the risk sentiment for our local currency. But this could actually be limited given we've been seeing a narrowing trade deficit as of late, even as she says remittance outlook might actually be murky in the near term. Check in now on how our local bourse is performing. We are recovering a touch. We are now up by 3.5% to 5721.27. Now, this, of course, after we had seen a massive fallout yesterday, that saw us tanking, and you can see that on your screens here. This slide down here. That was yesterday, going down by as much as 7% here, rather on the right side of my chart. That was tanking by 7%. We were leading the losses in Asia. I'm going to pull out the one-day graph for you so you can see how we're trading this morning. Now, nevertheless, we closed, at 5,500 levels yesterday, and we're back above 5,700 levels right now. Of course, as I mentioned earlier on, the central bank's surprise rate cut decision came after the markets tanked and closed. Now, Luis Lumingan of Regina Cap said that this fall yesterday was on the back of a lot of the U.S. data coming out. And Phil Stocks' Japet Tantiangco is saying it was really just because of profit taking. Recall that we had seen ourselves back into bull territory on Monday, and we did see 3 straight weeks in the green, so it was ripe for the profit taking. But Jonathan Ravelas of BDO is saying this pullback highlights that the rally from a recent low was simply a technical bounce, maybe not sustainable. It's still very vulnerable to all of these global adjustments and news. And one thing to be really watching out for here is how our net foreign selling is continuing, and also the ballooning in that yesterday, especially to 2.14 billion pesos of a net outflow that we saw. The exodus continues. That is the 22nd straight day of withdrawals and the highest since 4 weeks. Now, again, Lex Azurin of AB Capital Securities is saying we are not out of the woods yet. Quite rational for investors to be taking profit at this time. And just a very, very quick peek at our sectors here. One to be watching out for, of course, is financials and how that is reacting to this new interest rate cut. Take a look at that. Financials jumping, or at least recovering from yesterday. That is up by more than 4%, together with property firms, usually a big beneficiary, direct beneficiary of lower interest rates, also enjoying a bump up of 4%. So more on markets later on today. Moving on to other headlines, we are watching this Friday. Extending the Luzon-wide lockdown beyond April 30 does not seem to be a good idea. At least this is according to Socio-Economic Planning Secretary Ernie Pernia, who said handling such a move would be, quote, difficult. So in a radio interview, Pernia said many business groups are already calling for a partial reopening after April with safety measures in place. Now, instead of a Luzon-wide quarantine, Pernia suggests that the government should instead localize the lockdowns and allow restrictions to loosen up in areas with low risk of COVID-19. Pernia also adds that shopping malls should be allowed to reopen at 50% capacity, with physical distancing still strictly observed. He also adds that other essential businesses like laundry shops, barber shops, house cleaning services could also resume operations, and restrictions on public transportation could also be eased. But to avoid congestion, the NEDA chief said big companies that are allowed to resume operations should provide shuttle services for their employees. Now, minority investors of listed companies may soon be granted additional powers from the Securities and Exchange Commission, or the SEC. Now, the corporate regulator is now drafting rules to allow shareholders who represent at least 10% of a company's capital stock to call for meetings. So another proposed change is to allow shareholders that represent at least 5% of a company's capital stock to include items in the meeting's agenda. The SEC said these proposals are in line with its goal to promote good corporate governance and protect minority investors. The draft rules say that companies that refuse to allow minority shareholders to exercise their rights will face sanctions under the revised corporation code. And going cashless is in amid the ECQ. So banks and payment firms saw a surge in online transactions during this lockdown period as Filipinos try to do most of their bills payment as well as banking needs from their own homes. So banks actually noted a double-digit growth in digital transactions, interbank transfers, and e-commerce activity. That's amid the Luzon-wide community quarantine. You've got payment firm PayMaya. They also observed how previously cash-heavy segments related to basic necessities posted a rise in online transactions in the past week. The company noted traditional restaurants, small food specialty stores, and even frozen produce suppliers are now offering online orders and deliveries. CIMB Bank hopes the trend may lead Pinoys to transition into all digital banking solutions soon. Okay, arguably, despite all of these possibilities of now transacting digitally, nothing could have prepared our pockets for the financial impact of this COVID-19 pandemic for our personal finances and especially our homes. We've actually got with us right now Mitul Lakhani. He is iMoney CEO on the line. Help us understand what we can actually do right now to limit this financial fallout. So Mitul, wow, your services are right now the most needed. Tell us just very, very quickly, what is the first thing that people have got to do right now?
Thanks, Tony. Good morning. And it's good to be back. It's what I'm about to share with you is like really simple, but so important in this time and day. I think the first thing people have got to do is really list down all of their expenses on a very detailed manner, and then literally go through them in detail and say, what don't I need? What don't I need? What don't I need? Cut. What can I? And then look at what you can renegotiate, what you can get help for from the government. And literally go through each of your expense line items and see how you can bring those down. That's the first thing. And the second thing is, if your income has been impacted by the current situation, go and look for additional income opportunities. There are lots of different income opportunities out there. You can actually go onto our website. We've been keeping, our consumers updated through our learning center with a specific COVID-19 guide. And in there, we have lots of tips on how to save money, lots of tips around additional income opportunities. Also lots of tips around what is available in terms of government programs as well.
Okay, so we all wish that we had done this before this lockdown, right? And we wish that we had this emergency fund. I think you were saying that we need 3 months' salary as emergency fund. How does one start doing that right now? Apart from, you mentioned cutting out expenses, is it prudent to be even tapping into loans right now? Interest rates going down as we just reported. But if you don't have a stable cash flow security, how can we manage our debts?
Yeah, so our recommendation, Danny, at times like this is, first of all, learn to live within your means, because if you can't do that in the first place, then borrowing it's not really necessarily going to help you in the longer term. But you're absolutely right. Even if you did want to borrow money, and if you went out there and tried to get a loan from a bank's probably going to be looking at what is the stability of your income, what does your outlook look like, things like that. So I think really important, first of all, figure out how you can live within your means with what you have. It's painful. It's really painful. But I think this is probably the one time that we need to be really financially disciplined from a personal finance perspective and start planning to set aside as much money as we can, at least for the next 3 to 6 months in an emergency fund. Once you've done that, then you have a little bit more visibility in terms of what your other options may be. And you may have the ability then to say, okay, now I actually have capacity to borrow because I've actually cut back on a lot of expenses.
Okay, so, but more difficult, to be done rather than said, easier said than done. One other question I get a lot actually is, stock markets are severely sold off. And it might be an opportunity to start buying them right now. Is this actually the time, especially since it's very risky? Is this the time to be taking bets on businesses and buying cheaper assets at this sort of crisis period?
Yeah, that's a great question. I got asked yesterday, is this a good time to buy property, for example?
Yes.
Look, my personal recommendation is, if you can, first of all, set aside some cash on the side and you can save some money, and then first start off with that, and then watch the markets, because I think, right now we're still going through a period of volatility. There will still be some opportunities, but they'll be pretty limited at this point of time. So probably wait on the sidelines. Make sure you have the cash handy so that you can jump into the market as and when the opportunities arise. So to summarize, probably wait on the sidelines at this point of time and get past the volatility first.
Okay, so make sure you have the correct cushion first in place before you start taking those big risks. What's your reaction to how financial institutions are adjusting? This is something that we've been discussing for many, many years. The digital transactions rate in the Philippines has been rather low, and this has forced all of these banks to just basically step up. What's your initial take on that?
Um, if I look back about 3, 4 years ago and I compare it to where we are today, from enabling sort of digital or online banking, I think we've made a lot of progress. The banks have made a huge amount of progress. At least, and you said announced earlier on that online banking and online transactions have really spiked during this period. So clearly that's a plus point. There is still a long way to go as well. And I know all of the banks in some shape or form are really doing a lot as they can to accelerate a lot of their digital initiatives. So I think the one positive thing that's probably come out of this situation that we're in from a banking perspective is for consumers is there will be an acceleration from banks towards adapting and going digital, and trying to provide the entire suite of services on a digital platform to the extent possible.
What pain points are you seeing and bottlenecks right now? A lot have been focusing on padala, what we call in Filipino, so sending money. Do you feel that has significantly improved during this period? It's a lockdown. You cannot physically send money anymore, and you need digital channels. What bottlenecks need to be addressed right now?
So you pointed out remittance as one. Again, I do think it's a lot better than what it was in the past. There are some limitations in terms of people having to go and pick up money from sort of physical stores. Remittance is one. What we are specifically seeing in our business is probably some limitations around consumers who are actually capable and applying for credit products, getting access to those products, because there are still limitations around, KYC, physical wet signature for application forms, limited ability for consumers to go into the banks and sign documents and things like that. But look, again, I go back to what I said previously. We're in much better shape today than maybe we were 4 or 5 years ago. There are some players that we're continuously working with already in terms of building a lot more of a end-to-end digital infrastructure and really overcoming some of these pain points, specifically when it comes to applying for credit products.
Amitul, what is iMoney doing exactly? Especially, right now is your time to shine. How are you pitching in?
Yeah. I think today a lot of our time and the team's time is taken up in terms of making sure we're keeping our consumers updated with what's going on, specifically around what are the options available to them in terms of helping them improve their financial well-being and financial health, sharing tips with them in terms of how to save money, how to make the most out of the money. And really, we're still open for business as well in terms of helping consumers access credit products. It's a little bit more challenging now than maybe it was before this pandemic kicked in. But we are open. We're doing business. All of our staff are working from home, and we're there to continuously help consumers as much as we can through all of their personal finance decisions.
Can you give us a bit of flavor of how usage has changed since started this platform, and what's the behaviors like of Filipinos in terms of borrowing money? You have credit card options, for example, insurance options here. How has that changed since you started?
Yeah. Great question. So what we've seen is actually search volumes for credit products hasn't really changed. So there are still people out there looking for credit products, What we've
Okay.
seen is a spike in search for broadband products because obviously a lot more people are working from home. So people are trying to get the best sort of broadband product available out there. And obviously, naturally, you'd expect people to look at the insurance as well. So you're seeing a spike in terms of search for insurance products as well. But what the one part of our site that's seen the most engagement has probably been our learning center. And that's just because we've just been making sure we're keeping customers updated. Our social media engagement, doing a lot of tips around how to save money, how they can make the best out of the money. And then even sharing some of the things I shared, earlier with you in terms of how to make sure you have that financial discipline to get through this period, especially at this point of time.
So you're becoming much more a learning resource rather than just an array of products available. Tell us, you already that the digitalization of banks is improving, at least from what you're seeing. What about the inclusion? You mentioned that there's still less, credit card applications going on. Is that still the case? Is it easier now to be part of the formal financial system?
Look, I think to be perfectly honest, during these times it is going to be challenging to get access to credit products. I think first and foremost, what the most important thing at this point of time, and this is what we're spending a lot of time talking to our consumers about, is get your own personal finances in order. As a business, we've always been about helping consumers through the entire sort of personal finance decision. So that includes everything from education, which again is now probably a more important piece than ever. And then obviously after that, if they're still interested in products, we'll help them through the process of deciding which product and applying for it. But what we're seeing today is the education piece is really, really important, more so than before. And consumers are coming to us and really asking for, all sorts of advice and consultation. And we're doing the best that we can to make sure that we're giving them the right tips for them to manage through this uncertain time.
Nitul, just a question on who are these people? Are they, a specific demographic of people? What type of social strata are these? The poorer people, or the ones with some sort of education already on how to manage finances? Are they the ones with bank accounts already? Who are the best users of your platform?
Danny, I'd love to be able to say it's a specific segment. The reality is everybody across all segments, across all income levels, at this point of time are affected, right? So if you think about it, all of us are affected in the same way. So all of us are out there and all the consumers are out there looking for all sorts of information and all sorts of help, and including products as well. So look, there is this pandemic is affected everyone, probably more so the lower income people. So we're helping as many of them as we can as well. But to answer your question, it's sort of all sorts segments, all demographics, all social stratas.
And finally, before I let you go, there's a lot of government aid coming out. Can you give a bit of detail for our viewers here? What measures are available for them to tap at this moment in these difficult times? I mean, as you mentioned, we all wish that we had been more financially earlier on, but now it's also time to be asking for aid. And are these going to be helpful in the long term as band-aid solutions in the short term?
Yeah, look, there's a number of different sort of programs out there. Some of them are government initiated. Some of them are sort of financial sector initiated by the banks. There's a mix of fiscal and monetary stimulus programs and packages that have been announced by the banks. All of this information is available on our website. But I think the key thing there is, and we encourage our consumers to go and check it out on the website, because there we make it clear in terms of what is the relevant one for them. And let's be clear, a lot of these government assistance programs and stimulus packages are really to help 3-6 months timeframes, right? The situation is ever changing. As you announced earlier, the government's cut policy rates even more this morning, and governments are having to make decisions on a constant basis to overcome this. Introduce or increase their stimulus packages as things sort of continue for longer periods of time. So it's a really fluid situation. We, even as a business leader, it's very much a fluid situation. So we're taking each day, each week as it comes, and really making decisions to ensure we're doing the best for our consumers and also for our employees as well.
Okay, well, thank you so much for those insights. That was Mitul Lakhani, iMoney's CEO. Now, he did also mention, guys, that apart from the fact that privilege that we had all of these tools with us. We also just need to be learning and using the platform to educate ourselves in the event that we can actually afford to take more loans and have all of these other products at our disposal. So thank you so much for joining us today.
Thank you for having me, Danny. Thank
Okay, guys, it's now 10:55 a.m. And one important thing that we need to note today, really the biggest event possibly economically in the world, is the GDP figures that came out of China just at 10 a.m. this morning. For the first quarter, the survey was a contraction of 6%, and it's performed worse than that. You can see on my terminal here, it's down by 6.8% year on year for the first quarter. Another thing to be noting here is the retail sales, which contracted year on year for the month of March by 15.8%. That's versus an estimate that was already double-digit contraction of 10%. That brings your retail sales year-to-date contraction at 19%. So close to a 20% contraction there just for the month of March. And that follows a February figure of more than 21% contraction. And again, it's worse than what analysts or economists had expected of 12.5%. One bright spot, if you can say that, is industrial production for the month of March in China. That was contracting by 1.1% instead of the worst expected at 6.2%. Now, I just want to take a very quick peek at how Asian markets are now reacting to that. Interestingly, you've actually got most of the markets in the green. Now, recall that this follows a very tough session that we saw yesterday across the board. A lot of most markets in the red. So this could be a recovery play. This could be a reaction to those GDP figures. But as it stands, we've got Japan's Nikkei 225 up by 2.5%. And let's take a look at China reacting here. I mean, the Hang Seng, first of all, in Hong Kong, up by 2.6%. Shanghai Composite up by close to 1%, together with Shenzhen and Taiwan as well, up by 2.8%. So a pretty good showing for the rest of Asia. Let's take a quick peek at our movers here locally. As I mentioned, we are still strengthening above 5,700. We are now at 5,728.81. That's up by 3.7%. So outshining those big markets in the rest of Asia. Let's take a quick peek at who are leading this rally or recovery play. Let's say, again, this comes on the back of the central bank doing a surprise let's say off-cycle rate cut. And let's take a look at that. ICTSI up by 7.1%. A couple of banks as well here. You've got the BPI, for instance, up by 5.7%, but also just conglomerates as well as property firms. We did mention property players were actually the best performing sector this morning. That is, you can see Ayala Land, SM Prime holding forth there for this sector here. But you've got two that are sitting out this rally. San Miguel Corporation down by 0.7%, First Gen as well. But overall, a pretty strong showing for our local bourse, hoping for the best, of course, as we end this week. And that's a first look into the business day. Today is a Friday, April 17, 2020. Thank you so much for watching. Do join us again on Monday at 10:30 a.m. Have a safe and restful weekend. I'm Danny Laurel, and we are One News.